Hi, everyone. Thank you for joining us today. Really excited. I have a wonderful panel with me. And we are here to talk about the future of compliance, regulatory exams across banks and fintechs. Before we get started, I want to let you know this webinar has been approved for 1 hour of CLE credit. Before the Q&A, we will display a code. Please write it down and return it with the affirmation form you'll receive after this program ends. So without further ado, I'd like to introduce my panel and then we'll get going. So I'm Robin Garrison. I'm your moderator for this session. I'm a managing consultant here at the Bates Group. And with me, I have Justin Vick. You want to go ahead and introduce yourself?
Sure. I'm Justin Vick, managing consultant here at the Bates Group as well. Prior history, I was a state regulator with the Washington DFI for about 10 years. Then went to work in compliance at a crypto exchange for a little while, and then hopped over here at Bates in July of 22, primarily running the independent review program. So that's me.
And Dan Wood, would you like to go ahead and introduce yourself?
Sure. I'm Dan Wood. I'm a counsel at Pillsbury Winthrop Shaw Pittman. I've been part of our fintech, blockchain, and payments group for about 8 years now. Before that, I was a regulator for the Texas Department of Banking.
Great. Denise, do you want to go ahead?
Sure. Hi, everyone. Good afternoon. Denise Wright. I'm an executive director at SMBC, where I've been there for the last close to 4 years, operating in the examination support group for the operations team. Prior to that, I served at several other foreign banks, mainly in the compliance space, and looking forward to being on this panel.
All right, thanks, Denise. And last but not least, we have Nicole Booth. Nicole, you want to introduce yourself?
Sure, thank you. Hi, everyone. I'm Nicole Booth, and I am the BSA officer at Meow Technologies, a fintech that's focused on business banking. In my previous roles, I've served as a BSA officer in banking. I've also worked at audit firms conducting independent reviews and also providing consulting services. Robin, I think you're muted.
Thank you. That was a test. I was joking. Thank you for joining us today. I want to remind everyone that we do have a Q&A function here in Zoom. So if you have questions throughout, we will have time at the end to address any of those, and we welcome all of your questions on the subject matter. All right, so we're going to go ahead and get started. Denise, I'd like to start with you. How does your background inform your perspective on today's topic?
As I mentioned, I started my career in compliance, and I did that while I was attending law school at night and working at foreign banks, mainly building out their programs. And these banks were under some type of public enforcement, so they needed a full overhaul to update their policies and procedures and their program in general. So in these roles, building programs and demonstrating to the regulators and audit how we have enhanced these programs in a sustainable way, it impacts my perspective on how important it is to have things clearly laid out so that others can see and understand what you have done. And having that attorney perspective to clearly document and having proper supporting evidence, from my perspective, if it's not documented, it does not exist. So having that background really informs the perspective in working in these regulatory exams.
Thanks, Denise. I'm really excited to learn more from your perspective today. Dan, how about you? You've worked with both banks and fintechs. How has that dual lens helped your clients?
I feel like it helps me provide sort of a balanced perspective because, the fintech industry is comparatively new, but banks have been undergoing examination for like 120 years or something like that. So being able to bring that perspective, I think, helps ease fintechs into the world of examination that banks have been living with for a very long time.
Great. And Justin, we're really excited because you were a former regulator. So how has that experience helped shape the way that you approach compliance consulting?
Yeah, I mean, in its simplest form, it's pretty much just being able to see things from both the regulator and the industry side. I think it's really helped a lot to help, Bates as a whole create policies, procedures, perform reviews, develop remediations really that are going to hold up to the regulator standpoint and the way that they view things. So I think that's really the key point there.
Great. And Nicole, do you have any thoughts here as well? You've seen things from multiple different perspectives, so.
I think regulator is the one role that I haven't had thus far. So I've worked for a bank that was a sponsor for a lot of fintechs. I've also worked with them directly as either their independent reviewer or as their consultant, helping them put their programs together. So I've definitely been able to see how things have evolved between examiners and banks, and then also how they impact fintechs. I've seen how their increase in knowledge and scrutiny over the years has definitely come to impact exams significantly.
Great. So this will be really fun. We have a lot of different perspectives today. So let's move on and talk a little bit about the increased scrutiny post 2023 enforcement trends. We're seeing a lot of shift in the way that regulators are approaching fintech, the way that banks are approaching fintech, and then we also have multiple different regulators that are involved. We have, from the bank side, we have the OCC, we have the Federal Reserve, the FDIC, and then of course on the fintech side, if they're a licensed money transmitter, we also have state regulators. Then the big question on everyone's mind, what's happening with the CFPB? So there's a lot going on right now. I think that it's important for us to, we're going to dive into why exams matter now and how that can, set us up for success in the future. So Dan, I'm going to start with you. Why do regulatory exams matter? And are regulators holding fintechs the same standards as traditional banks today?
I mean, they don't really matter at all. So I think we can probably take the next hour off. Now, the beyond the obvious, right? They matter because they affect, whether or not you can actually do your business, right? Beyond that, what I think especially fintechs don't understand, but banks are a little more familiar with, is that this is often, hopefully, the only real contact you have with your regulator, but it's ongoing and you have to have a relationship with your regulator. So setting the tone, I mean, it's an opportunity and it should be looked at as an opportunity rather than drudgery, right? Nobody likes to be audited, but it's important because it builds your relationship with your regulator. If you have a good history of exams with a good relationship that you've built up from that, no promises, but you get a little bit more of the benefit of the doubt when there's something in a gray area, or maybe you have a criticism that you need to address. So for the obvious reasons, plus some non-obvious reasons, I think they're very important. And in terms of like the standards, the fintechs versus banks being held at the same standards, essentially, yes. Regulators are looking for compliance. Bottom line, compliance with the law. I think the fact that the banking regulations are more mature and hopefully a little better understood and established, creates fewer areas of question of what exactly compliance looks like as compared to fintechs. But it's quickly becoming not the case in the fintech space.
That's all really wonderful information. And obviously we've seen an evolution pretty much since 2020, I'd say, was when we really started to notice a lot of these shifts. COVID was obviously a huge accelerator for us with a lot of fintech. But seeing the bank regulators engaging with fintech for some of the first time, and then seeing our fintechs engaging with bank regulators has been really interesting. Have you also noticed a shift in their tone recently?
I wouldn't say a shift in tone exactly, but the conversation is a little bit different. Like 15 years ago, all of the state MSB examiners, for instance, pretty much they came from the banking side. So because there hadn't been previously a deep history of MSB examination. So they were former bank regulators looking at money transmitters. And now you've got more tech savvy examiners out there who are familiar with real fintech business models, as opposed to just taking the banking industry and square peg round hole, the fintechs.
Nicole, I'm interested to get your perspective on this. What are your thoughts?
Yeah, I agree. I think there is definitely that increased scrutiny where banks and fintechs are being looked at the same, with the one caveat being that banks have that layer of oversight. I've even seen where examiners are coming into the bank with information that they've already reviewed a fintech. They know where some of the skeletons are hidden, if you will, and they're coming in to see if the bank is aware of those, if they're performing their oversight and third-party relationship due diligence properly, and if they're fully understanding the way that the examiners are now fully understanding innovation. They want to make sure that the banks understand their customers as well.
Denise, do you have anything to add here from your perspective?
Sure, I'll jump in. So regulatory exams, they certainly matter because as you know, as a consumer, thinking about it from your perspective, it builds trust in the financial institutions and it demonstrates safety and soundness. So I think the regulators are definitely taking a closer look. And over the years, we've seen that, traditional banking of what it looks like, it has evolved. We have various means now to invest our money. So it's important to demonstrate that the other variety and outside of the non-traditional banking, that those can also be relied on. So I think the standards and the matter and the level of the program review, it depends on the risk that the organization presents to the financial system. And the regulators are probably looking at it from that perspective.
That's very helpful. Justin, from your perspective as both a regulator and a consultant, what do clients typically overlook when preparing for these things that we're talking about?
I'd say the simplest answer is focusing on specific areas that are being currently scrutinized by the regulators. In the fintech banking relationships, a lot of it's going to be on transaction monitoring or KYC, CIP, and third-party oversight. But I think the issue you can get caught up in is focusing too much on those areas without improving the program as a whole, right? So the AML program itself is a living, breathing thing that should constantly be improved. So if you're only focusing on specific pieces, that can have other pieces lag behind, and so you're going to come into issues there as well.
All very good points. So now let's move on and talk a little bit about differences in the actual exam structure. So we've talked about banks, we've talked about fintechs, and then I want to be really clear for those who are paying attention, who aren't on the panel, is so we've got a third category here as well that we're talking about. So we're talking about fintechs that are banked by banks. So there's a lot of scrutiny that is placed on all three of these parallels, and they're evolving at different rates. They are based on different sets of standards. So it can be really challenging, especially if you're, a fintech being banked and maybe you're not regulated directly, or in particular, a fintech that's not used to being regulated in a particular way. It can be really difficult to understand the structure, what this is going to look like. So Dan, tell me a little bit about how exam expectations differ for fintechs compared to banks from a preparedness standpoint.
At a 30,000-foot level, the basic preparedness kind of things aren't that different. I mean, they're going to look at your entire compliance program. They have the authority to look at pretty much any aspect of your business. And they'll send you questions and information requests in advance of the exam typically. And so that gives you an idea of what areas they're going to look at. And you just want to make sure that you answer every question as thoroughly as possible as asked, right? In terms of what they're looking at, I think my co-panelists can probably give even more targeted answers to like the nuanced differences between what questions are asked of banks, what information looked at fintechs. But I'll also mention that if you're a fintech with a relatively new kind of business model or lines of business that are using new technology or putting new spin on things, especially in the crypto space, be prepared to explain that, not just from a compliance perspective, but from an operations perspective. Be prepared to explain what staking is or how, stablecoin assets are being managed and so forth, or whatever your particular thing is. There's a chance the regulators have not seen it before, and you may just need to do some education.
Education of your regulators, I think, is a critically missed point in a lot of ways, especially when you're talking about fintechs that are being banked and their banks are being examined. So that's a wonderful point. Do you think examiners take a different approach when they're walking into a fintech versus a traditional bank? And does that present a disadvantage?
I wouldn't call it a disadvantage. I think they do take a different approach because um, I'm going to try and say this diplomatically, but sometimes fintechs are operated from a startup mentality, which is not a necessarily a culture of compliance, regulatory first kind of approach. Whereas banks, like I said before, have been examined for 120 years or whatever. So when you go into banking or when you're coming into an exam, you know what to expect. Banks accept it. And sometimes you get a little bit of pushback from some of the more tech-minded folks who don't have the regulatory background. So regulators can be aware of that, and also like my role as counsel, helping coach them to be, a little more forthcoming, and that this isn't necessarily a bad thing, is sort of the main shift that I see between the two.
Yeah, that makes a lot of sense. Nicole, what's been your experience since you sat on multiple sides of that equation?
I think there two kind of points came to my mind, Dan, as you were speaking. You're absolutely correct. Trying to be diplomatic, but the truth is, a lot of times fintechs aren't, compliance first because they're doing what they do best. And I remember that, especially from my consulting days. They are creating something unimaginable from my perspective, from an innovation perspective, and they often would be like, "What's BSA? I have no idea." Like, they would come to me because someone told them they had to have that program in place. So I think from my perspective, and I do, have a little bit of a step up because I've been in banking for so long, being at a fintech now. I find that accountability on my program is extremely important. So making sure as a fintech that you're owning your risk, you know what the risks are, you understand the regulations, that you are either you have either direct or indirect requirements with your bank partner, and making sure that you have that robust compliance program and not just implementing things that your bank partner told you to, and just keeping it there. And then the other point that I was thinking of as well is, your bank partner is the partner word is so important. Don't enter an exam with a surprise. Don't treat your bank partner like they're auditing you or they're an examiner. And if you find something, if you're self-testing or if you are going to a new market, always overshare with your bank partner. The worst thing that can happen is that an examiner and your bank partner find out about something at the same time during that exam.
Well, that is a really important point, and I have seen that happen far too many times, and it really doesn't put your bank partner in a great position, and they can't help you out if they're learning about it at the same time. So Nicole, there's a question in the Q&A about something you said earlier, and it's how do the bank examiners have access to a fintech's regulatory issues? Can you provide a little bit more context on what you were saying?
Yes, so they may have it's some type of examination. Not all fintechs are directly examined, but there may be times where regulators do reach out to fintechs because they want to understand. I have seen that where the fintech is not directly examined, but examiners want to have an understanding about whatever innovation they're bringing to the market, or if they have some consumer issues that they're looking at, they want to kind of understand better. The regulators will go directly to that fintech and have conversations with them. I've even seen that where the regulator is not their bank partner's direct regulator, but they're reaching out because they want to have information. So that's one way that they do get that. Then there's also, if you do have a fintech that has kind of like a state requirement, it might not be on a federal level, the examiners are talking, and they are sharing that information and ensuring that when the bank is looked at, that they're looking at any issues that were found during those conversations.
Great. Thanks, Nicole.
All right, one other thing I thought of, don't ever sleep on SARs, because if you have multiple bank partners, they may get information that way as well.
Oh, that is a really, really good point. So looking at your product across all of your different bank partners, it really for you as a fintech, it's the same program. So if you've got issues with one bank partner, you probably have those same issues with another bank partner. You don't want to find that out too late.
And if one is identifying that issue and reporting that to their examiner and the other bank partner has not, that's where you get into some trouble as well.
Yeah, I've seen that. That has happened to me, so I know exactly what you're talking about. That is not uncommon, especially since we see most of these fintech bank relationships. It's not common to have one partner anymore. You have multiple. So these regulators, they are talking to each other. So that's something to keep in mind. And there's a question here in the chat about the definition of a fintech from an examiner perspective. I would like to ask Dan, I'd actually like to get your perspective on that from a legal perspective, and then I'll weigh in on an operational perspective.
Right. Well, as a starting point, there is no legal definition for fintech. And then just in terms of like sort of industry jargon, there isn't a consensus definition of what that means. Like looking at this question, a well-established MSB that offers remittances via mobile app or online, you know, 10, 15 years ago, that was like definitely fintech. That was like cutting edge fintech. Now I see what you mean. It's kind of not. We've been doing this for a while now, right? Um, I think, from a regulator's perspective, they're probably not even going to use the word fintech. They're going to come in and ask things about like your vendors. Are you banking payment providers? Or, they're going to use a variety of terms, none of which are legally defined any more than fintech is. So just remember at the bottom of it is what do they do? Whether they're regulated, what their risk profile is based on the activity. So just have a conversation with them about what they're talking about.
That's exactly it. And I think that's actually one of the most overlooked issues with fintech banking and regulated fintech is a nothing term. So you have to look at the underlying activity and determine what the actual product is and who the customer is to really understand what it means. So that's a great question. Thank you for sending that in. Denise, I know we've jumped around a lot, but I would love to understand how you're seeing hybrid partnerships affecting exams, how exams are conducted or scoped.
Oh, yeah, sure. So from a scoping perspective, the request, I don't think they've had a big shift, as Dan had mentioned. You get a request with items that you're supposed to produce in terms of the first day letter. I think the level of scrutiny has been somewhat consistent in terms of those requests. We may see additional questions that are coming in. I think where I saw a bigger shift was coming out of the pandemic where reviews were not done for a number of years, or given the situation, or if they had potential delays, I did notice an increase in the number of sample requests. For example, they may have wanted to see more samples than they did back then than the regular sampling size. But I think for the most part, things have evened out. We're now, we're out of the pandemic. We're now back to a regular exam schedule where it's every year or every other year, and we're seeing more consistency in terms of what that request looks like. To address your point about the hybrid exam, it's on-site, off-site. If examiners are there, we definitely try to be there in person too, so that we can have that in-person engagement with our reviewers. And with the hybrid exam, I think there's been more of a shift in the relationship aspect. Back in the day when everyone was on site all the time, you would go in and check in with your examiners and kind of read the room, see if what you've provided them, if they had any question. So I think being remote has impacted that a little bit. No longer the opportunity to greet the examiners in the morning and check in with them. But I think much of that now is being managed by emails and meetings and liaisons. So, and when we're on the examination with those meetings, definitely trying to be present, have our video on, our camera on, so that we can see those reactions. Or is the examiner understanding what I'm explaining? Or are they getting lost, trying to read those cues from their facial expressions. I think not having them in person consistently, it impacts the ability to kind of see where things are, but it's just a different way of doing things. And I think that's consistent, not just with examinations, but even in the workplace, right? These challenges present themselves with the hybrid work model. But definitely, I think communication is the key, and having open communication helps.
Thanks, Denise. Really appreciate that perspective. And we're going to move on to our next topic, which is preparing for an exam. But there is a great question in the chat, and I think it's important to answer it real quickly before we move on. And that is there a difference between a partnership with a fintech and a bank being a BaaS for fintech? Bank as a service is also another term like fintech. It means nothing. We have had fintech and non-fintech partnering with banks for decades. And I think what BaaS is, a transference of responsibility from a bank to a fintech to deliver a product to a customer in a different way. But ultimately, what a BaaS partnership is completely up to the fintech and the bank and how they divide the responsibilities of who's doing BSA AML, who is doing consumer protections. Is it the bank? Is it the fintech? As well as just understanding what the underlying product is. So I think, if there's one thing you kind of take away from this statement is that BaaS, you really have to understand what's going on underneath that term. It's not a one size fits all term, but it's being used rather ubiquitously across the entire industry. So with that in mind, preparing for an exam, we're going to start with Dan. I'd love to hear your legal perspective on how an institution, regardless if it's a fintech or a bank in a, that is banking fintech in a BaaS relationship, love to understand how institutions can best prepare and protect themselves from a legal perspective ahead of time.
From a legal perspective, there's actually not a lot that I think there is to say, because your examiner has basically the right to look at anything. So it's not like you're going to be calling me in to ask whether you should or shouldn't reveal documents or information that were requested, for instance. The short answer is yes. Really, what I see is a little bit less legal and a little more just sort of general practice, but somehow it ends up coming before the lawyer's eyes often, is like interpreting the questions and answering every part of a question that is asked, providing the information that was requested, not providing too much information, but adequately answering the question, that sort of thing. So in terms of preparation, I would say that from my perspective, involve your legal counsel early and often. They can help you skip over some of the little pitfalls that you might have just by like answering a question incorrectly or incompletely or misunderstanding the point of a question. So that's my main tip.
Engage your legal early and often. Are you going to get that tattooed on your forehead?
I have it on a business card. It's
a little less permanent, but we'll take it. Justin, what are some practical steps that smaller companies can take to avoid being overwhelmed by everything we've just talked about?
Yeah, Dan brought up a pretty good point. Don't dig your own hole, I think is the takeaway from that whole spiel. But in terms of preparedness, when it comes to fintech banking partnerships, having a clear understanding of what your bank's expectations of your compliance program are, really knowing what your responsibilities are and what you're required to do in order to, satisfy the requirements of your banking partner. But when we transition to fintechs not under a bank sponsorship, these are going to be licensed entities, right? So these are going to be the companies that are going to be having state examinations. So when it comes to state exams, it's no big secret. There's a standardized list that goes out to every company that's about to have an exam. So if possible, I would talk to your colleagues, see if you can get your hands on that list. Obviously, I'm not going to share it, but you can try your best to get it. So once you have that, you know everything that's going to be requested on that end. You can start to consider naming conventions. As it says on the slide there, centralized doc management. making sure that every one of those pieces is easily accessible and readily accessible to provide to the examiners. Also, it does say, training and communication with internal teams. So the state exam is going to go into not just compliance, but, finance, management, ITIS, things of that nature. So making sure that you have somebody in those departments that's going to be able to answer those questions correctly, alongside legal, to make sure that nobody gets in trouble, as we mentioned. Those are great things to do. And then the last bullet there, we talked about mock audits. Shameless base plug here. We do actually have a mock examination product. So if that's something, any of the licensees in this room who haven't been examined yet want to get ready for something like that, feel free to reach out.
Thanks, Justin. Do you think that compliance culture plays a part here?
I think it definitely does. Corporate governance is always a big focus when it comes to examinations, making sure that compliance comes from the top down. So you're going to need buy-in from the board, managers, executives to make sure that compliance is well staffed and funded in order to, satisfy the requirements. So I think everybody knows, I think it might have been in the Q&A, that compliance doesn't make any money. So everybody's well aware of that, but at the end, compliance failures can cost a lot of money. So as long as the board understands that, I think it's, a way forward to making sure that from the top down, compliance is important, making sure we comply. And that way it leads into proper resourcing, which makes everything run smoother. So.
Absolutely. Nicole, from your perspective, how can fintechs be prepared and help prepare for bank exams?
Yeah, I spoke to a little bit before, having that accountability of your program, making sure that you have that robust program and understanding your risks, but also engaging with your bank partner, letting them know. And a little bit of that onus, I guess, is on the bank partner as well, to ensure that when an exam is happening, that you're communicating properly, that you're making sure that your fintech has all of the right documentation and reporting. I think that's something that gets missed often, that it's not until an examiner is asking for a certain report that the bank partners is asking for it from the fintech, and they've never established that report or had to create one. And so now it's kind of a fire drill. So making sure that an exam is happening, understanding what's most likely going to be asked of you, and starting to pull that documentation, taking a look at it, sharing it with your bank partner, making sure it's exactly what, they would expect it to be. And again, having those open conversations, making sure, I find it very important. We talked a little bit about with examiners, making sure that they understand, and then kind of teaching your examiner, if you will. It's the same thing with your bank partner. You want to make sure that they fully understand how your product and service works, and making sure if you have gone into any new markets that they're fully incorporated that into their understanding of your product.
Thanks, Nicole. And I think, important point, because we keep talking about these different types of exams with the fintechs and the banks, and then the fintechs and the banks. And I think one important thing for everyone on this call to remember is not to get too swirled up about which of these three we're talking about. The reality is they all have the same basic tenets and the same basic principles. They're all based on the same regulatory guidance, although the regulators might be slightly different and they might have a slightly different approach. That, whatever Nicole or Justin or Denise or Dan are telling you here, it is applicable to any of these types of relationships. So I would, take away sort of the general thoughts and apply those to your programs as well. There's also a great comment in the chat that I want to make sure everyone sees, and that is to read consent orders to learn the mistakes of others. Do this. This is wonderful. Of course, you're only going to see what's public, so you're never going to know what's under the hood. You're never going to know what they actually negotiated out of that consent order, but it can give you an idea of sort of what they're looking at. So that is a great addition.
Let me add a quick caveat to that, which is to say that especially on the banking side, the consent orders that you see are usually the most egregious examples. So just don't let it warp your perspective into thinking that that's all the regulators go after. There are plenty of minor violations that don't end up in like public consent orders.
Well, that is a very, very important point. Okay. So let's move on to talk about some common findings in exams. And again, we're talking generally about these many different types of exams, but we are seeing the same findings popping up across all of these different types of exams. So I'm going to start with Justin. Can you give us an idea of what some common findings or red flags you're seeing surface in these exams right now?
I think they're all on the screen right now. So yeah, obviously generally speaking about AML, because I think everybody who has been licensed and had an examination knows that state-specific requirements is really where a lot of hangups are going to lie. But when we talk about AML, these are really the main things, transaction monitoring gaps. So really making sure that the transaction monitoring system is accurately flagging transactions that should or potentially be reportable. And I think that's going to kind of tailor into internal QC and model and systems validations, really testing the actual systems and making sure that they're working as intended, making sure that, all the rules that you have in place are adequate and are actually identifying the activity that you want to identify and testing those, in a sandbox environment to make sure that they're flagging the way that they should be at the very base level, is really a key to kind of surviving some of those. And as that transitions into fintech and banking, obviously that's going to be an unusual activity referral or an unusual activity report, not a SAR, because that's not a licensed entity. So just making sure all those investigations are straightforward, coherent, and good enough to submit to your banking partner so they can make the determination on filing that SAR or not. So just making sure nothing's missed. Worst case scenario, you refer it to the bank to look at it, and that's that. Whether they file or not, it's really up to them. So that's not going to be a problem for the fintech as long as it's referred to sometimes as over-reporting, or covering your own butt, as we say, but making sure that those things actually do get escalated up and looked at so there's no deficiencies in identifying potentially suspicious activity. Then you have vendor oversight. Obviously, if you are in a fintech bank sponsored program, you're going to have the bank being looked at. So making sure that the bank has proper oversight, but like I said earlier, requirements that are on you, you're fulfilling all those requirements to not only protect yourself, but protect your banking partner as well. So I know that we've seen historically, like Dan talked about, consent orders to where there's inadequate fintech program oversight over these fintechs that are under the bank sponsorship model. So just making sure all those things are dialed down and effective so that everybody's compliant is really the key.
Thanks, Justin. You've hit all the really great points here. So Nicole, can you tell me a little bit about a fintech's role in program accountability? All these things that Justin said, being present also in a bank-sponsored relationship with a fintech. Can you talk a little bit more about that?
Yeah, absolutely. I think, I keep talking about accountability with your program because it's just so important. What I have seen as well is there's the way that an exam goes can actually shape the program for the fintech as well. So when we're talking about why are exams so important, I think one point that we didn't talk about is legislation through enforcement. And so we've seen where a lot of requirements come to fruition through an exam, and that's going to directly affect the fintech's program. So making sure that you're a part of that exam, making sure that you are having those conversations as much as you can with your bank partner, also engaged in examiner conversations as well. It's so important, and not just waiting for the kind of exam findings to come out. And I did see in the chat there was a question about AI, and so I'll take this opportunity as well to kind of chime in on that, about how it's been viewed during examination. It's, to me, it's viewed very much from like a model validation perspective. You want to make sure that any type of technology that you're using, you do know how it's used, how it works, and that you're doing verification and testing to make sure that what's coming out of that, whether it's, I've seen AI used for KYC, KYB as mentioned, but then also in EDD reviews, bringing information together, kind of helping to do that due diligence, making sure that you're verifying that information and you're not relying on that kind of garbage in, garbage out.
Thanks, Nicole. Really appreciate that perspective. And in the interest of time, because it's 12:40 and I think all of us could talk about this all day long, I'm going to go ahead and move forward. Although this particular topic, we could talk about it all day. So the next topic we want to talk about is coordinating across business units, because I think those of us who have been involved in examinations and audits and what have you understand that it's not just compliance's responsibility, it's the entire company's responsibility. There's many different partners involved. And when you have a bank sponsored relationship, you're now talking about two entirely separate institutions that have to coordinate together. So Denise, I want to start with you. Can you tell us how a large institution like SMBC coordinates internally during an exam?
Yeah, I think generally large institutions, they establish a point of contact or group that can support the examination life cycle. So these teams liaise directly with the regulators, having open communication on scheduling for exams, regular meetings. And within the organization, there may be subgroups, such as the team that I am on, and we are assigned to operations specifically. So we not only support these regulatory exams and working with our points of contacts, but we may also support audits. So we have more of a huge picture of what's going on. So the key takeaway is definitely having dedicated resources who can handle the rigor of the exam, ensuring that prompt follow-ups are made and any inquiries are addressed. The examination time is limited from the examiner gives you the first day letter to the time they're on site. So we want to be as responsive and respectful of the examiner's time, and that's making sure you have dedicated people who can focus on those requests and get the right people in the room to answer the questions.
Right people in the room to answer the questions is so important, especially with these more complicated payments and technologies. I think that's a really great point. Nicole, what lessons can smaller fintechs or smaller banks learn?
I think communication across that first bullet there, the cross-department collaboration, because fintechs, they're smaller, they have a startup mentality. A lot of times they don't have the formal committees in place that banks will have, ensuring that everyone who is so focused on their role understands how their role impacts compliance as well. So I'm always making sure that I'm talking to everyone from our sales folks to our all of our tech and engineers, making sure that we're constantly in communication. I think that's one of the biggest pieces there. Then also documenting. I think Denise, you had said, document if it didn't happen, if it's not documented, it didn't happen. And I definitely have that on a t-shirt, making sure that you're documenting everything from changes to any issues that you've identified, how you corrected them. Those are so important for a fintech to be able to pass that information on to their bank partner during an exam.
All really great points. Justin, I want to hear from you from, your previous regulator. So what's your advice on how clients can break down silos between departments?
I think that question has already been answered, but I'll just go through, recap it, same thing, making sure, like I said, with that request list, what departments are going to be reviewed, what documentation is going to be reviewed, knowing exactly where that document is, keeping it centrally housed with the rest of, potentially requested documentation, but also like Nicole and Denise said, having that go-to point of contact to be able to answer those questions, is really the main thing, because once again, don't want to dig your own hole. So make sure that, the proper person is there to answer those questions. And then just a normal thing for any examination is going to be preset meetings with people from those departments. So just knowing who should be on those meetings, working closely with compliance to be able to answer any regulator questions or provide additional documentation or clarification is really the key there.
Justin, do you recommend coaching those people who are on those meetings beforehand, or how are you handling that?
I would leave that to Dan to coach them not to say things they shouldn't.
Sure, throw me under the bus. I would say there's actually not a lot that you shouldn't say. Obviously, if there's sensitive information that wasn't asked, there's no need to volunteer that. But really, I don't tend to like to coach, especially the operations and technical folk. But I might give them a spiel about like making sure they understand that they're talking to someone who doesn't speak their language. So explain it like you're explaining it to your significant other. Kind of uh, and hopefully maybe the compliance officer or the attorney will be in the room too to help just sort of smooth the conversation, because most of the problems that I see from those meetings in particular are just pure misunderstanding.
Yep, we've seen it a lot. All right, so in interest of time, we're gonna move on and talk about the role of technology in exam readiness. So we have seen a boom in technology. Nicole's talked a little bit about use of AI for KYC, but there's also some AI tools that are available out there that, and regular non-AI tools, we can't forget them, that can really help us to prepare for exams. So, one of the things that we're looking at right now as Bates is we're evaluating this technology both from the perspective of, is it useful for our clients? Is it actually going to move the needle for them? But also, is it responsible to use it? Because especially when you're talking about AI, you want to make sure that you know what the AI is doing, you know how it works, which that can be really challenging for folks who, I'm not an engineer. I'm not a data scientist. I'm a compliance officer. So how can I make sure that an AI works? Well, it's a lot of education. It's a lot of learning. It's a lot of reading about those tools. So I think, the double-edged sword of there is phenomenal opportunity out here to engage with technology, to be ready for exams, both from, the management perspective, but also just understanding how other AI tools like KYC, transaction monitoring, SAR filing, how they're working and how that feeds into your exam. But like I said, it's a double-edged sword because if you use those technologies to facilitate, you also open yourself up to the potential that those technologies are not fit for use or they're not actually going to be helpful. So I think being cautious about engaging with these technologies, but exploring them is something that every institution should be looking at. Dan, the question around AI in particular has come up. Do you have any concerns related to data privacy or maintaining audit trails or any of these other sort of technical legal issues?
Yes, yes. Sort of without launching into a deep rabbit hole, I've done presentations on AI usage, and at least from a legal practitioner standpoint, and this is advice that I give lots of clients, using AI tools generally, you're going to need things like an AI governance policy. You need to do your homework before you adopt any sort of AI tool, right? And that AI governance policy should absolutely cover things like confidentiality and data protection, right? And so you want to have that considered and in place before you even open the box on an AI tool. Some examples of things that come to mind are like whether you're using something that is sandboxed within your system, so that if you're say, you're feeding SAR narratives into an AI system or doing transaction monitoring, where are those records going? Also looking at the contracts to make sure that the data belongs only to you and is never claimed by the vendor that provides you the tool. These are some sort of new ideas that like we're still feeling our way through as attorneys, but you definitely should get legal involved when you're using any AI tool.
You're right. That is a rabbit hole of a topic. I could also talk about that all day, but I think, the point that I take away from what you said and something that I advocate for is before you engage with these technologies, make sure you understand how to engage with these technologies. So
Right.
it's not simply about plugging something into your system to make your life easier. That's not how this works, but they can be phenomenal tools. Denise, has your institution adopted any platforms, AI or non-AI, to help with this?
For all the reasons Dan just stated, that's still being looked into to see what would be the right resource or the tools. But historically, some teams have used different methods. Others have different preferences from Excel to SharePoints or a vendor-based tool or combination. It really depends on your preference and resources. But for some of the reasons Dan stated, looking into whether particular for regulatory exams, is there a potential for giving out confidential supervisory information? So those are some of the things that are being taken away, but different aspects of the exam can be managed using some of the tools I mentioned.
Thanks, Denise. So moving on, I'm really excited to hear about some lessons learned from recent exams. There are a lot of lessons to be learned. So I want to ask our regulator or former regulator in residence here, Justin, can you walk us through an example where exam preparation made or broke that particular exam?
I will keep it very general. Never going to name names on one of these, but I think the biggest lesson you can take away is it's very obvious to a regulator when a client or when a licensee or a company or bank isn't prepared for an examination. It's really evident when you can see how long it takes them to respond to certain things, and then not completely responding to initial documentation requests. Those things are very obvious, and it can become contentious at some points when you're requesting documentation and they won't provide it. And to be honest, in certain cases, we've seen where they would just create something out of the blue. So those are things that you definitely want to avoid because they are easily identified by the regulators. So just making sure that you are prepared is really the key because when you're not prepared, it's very, very obvious.
Great point. How do you help clients document and act on those lessons post-exam? So we have preparedness before the exam. What do we do after the exam?
Well, hopefully not too much. But so in any instance, you're always going to want to have a management action plan, MAP, which is really just kind of a remediation issues tracker. So where everything's kind of localized within this tracker and making sure that everything that pops up from any examination or internal or external audit is documented as an issue. And then making sure that issue is assigned to a person responsible for remediating that issue, what the remediation is going to look like, the timeline for that remediation, and then a current status of that remediation. So you can kind of show anybody who's interested how things are looking on the remediation side, what the status of those is, and when things are being worked on, improved, and fixed. So that's really all that comes down to. So you see instances where, from personal examples on the consulting side, we've helped clients build these MAPs, making sure that everything's encapsulated within those, but also aiding in, developing what that remediation is going to look like and potentially helping with those remediations as well. So really just making sure every issue that was ever identified in any of those reviews, audits, examinations is tracked and remediated appropriately.
That's great. So, great question. Follow up here, Dan, from a legal perspective, what happens when we don't do that, when we don't remediate the exam findings?
Ultimately, you lose your charter or your license. You may be subject to fines and penalties as well. Having a license or charter suspended or revoked is not the first step. Regulators don't take it lightly unless there's something super egregious going on. In a normal exam, most exams are results are the company's imperfect. That's fine. There are some matters requiring attention. Some of them may rise to the level of violations of law. Some of them may not. But showing the regulator, as I said way back at the beginning, right? You've got a relationship ongoing with your regulator, and your exams are the main pillars that build this relationship. So showing them how you respond to criticisms is just as important as being prepared. So showing that you've addressed or made a reasonable attempt to address everything they mention, or giving an explanation why, well, we consulted, our outside counsel and found that we didn't need to address this thing that you criticized us for, and opening a dialogue about it. Even that is better than just ignoring an exam finding.
That's great advice there. Denise, how can institutions turn really tough exams into opportunities?
As soon as the examination is complete, they should do a post-learning session. What could be improved, what areas were unclear, and really take that opportunity to take a good look at what could be done differently. So if there were different MRAs or MRIs that they have, as Justin mentioned, make sure that those are clearly remediated. And as we saw in the TD Bank case, they had a record fine, and that created different things that they had to do. They had to strengthen their program. They now have an oversight of a monitor, and it limited their business. So looking at that and coming out with really strong controls, that could be an opportunity to strengthen them in the future. So we want to just look at what we learned from the exam and see how we can improve it.
Thanks, Denise. All really great points there. We have 6 more minutes, and I would love to pivot. There's a couple of really great questions in the Q&A. So the first one I want to answer here, or I want to have my panelists answer, is how examiners get trained to examine fintech companies. Do they get additional training? And do they follow specific rules and regs? Justin, I'm going to throw this one at you. How do examiners get trained?
For the most part, on the job. No, so any well-established regulatory program within a state department is going to have senior managers and senior regulators who have been around for quite some time and know exactly how these new and emerging technologies should be reviewed. And it's kind of just tailoring, the existing set of regulations that are in place to these companies, but also once, updates get made to the regulations, how those apply to these institutions. So there's always training from top down within the exam teams, but also there's schools and conferences held to address all these new scrutinies and emerging issues within the space. So yes, examiners are trained to review fintech companies.
I think, your tongue-in-cheek comment of on the job these days, because technology and fintech and banking is changing so much, that there is a bit of truth to that. So there's a learning curve for those regulators when they're coming in. But what we're seeing on the bank side in particular is you'll often have a more experienced regulator that comes in, and then you'll have other in training regulators that may have not seen certain things. So more often than not, you'll have someone more senior on there that they can learn from. But there is a learning curve. And so, when you're interacting with these regulators, consider that there's, like we've mentioned earlier, there's an education opportunity. There's the opportunity to have conversation and really explore things together. So that's a great question. We have some other really wonderful questions here. There's one about clarifying which regulator examines fintechs, and just quick point of clarification. It can either be if there's a a licensed money transmitter, it can be the state regulators. But if they're in a bank sponsored relationship where the bank is extending their charter to covered regulated activity, it would be whatever regulator is regulating that particular bank. So the OCC, Federal Reserve, or FDIC, or in some cases, state banking. So really great question.
And as a quick aside on that one, the federal banking regulators have essentially always had that authority. They just used to rarely exercise it. But now that fintech bank partnerships are more prominent, it's coming up more.
It's getting messy of who's on first. But so there's another question here. And I'm going to ask Dan this question. Can a licensee push back on the number of examiners they can host during multi-state exams without it being viewed as negative? So I'd love to hear, Dan, your perspective, and Justin, your perspective as well.
My perspective is I'd reframe the thinking instead of pushing back, just sort of having a practical logistics conversation, right? Be open and honest and say, look, we only have a conference room that can sit 20 people. We currently have 25 examiners scheduled, or whatever it is. Explaining the practicalities and then letting them determine, how to address that, and just, work to find a compromise. I don't think that is viewed negatively by the regulators. In fact, they would prefer that to like having their examiners show up and like, okay, here's a box that you need to sit on because we don't have enough chairs.
The dreaded regulator closet.
Right.
Sit on a milk crate and give us a good mark. I just realized we have 2 minutes left, so I'm going to go ahead. I would love to ask my panelists, give me a 30-second, what is your top takeaway that those watching this webinar should go back and tell their team? So Justin, I'm going to start with you.
I don't even need 30 seconds. I would just say, be ready for an examination, be prepared at all costs, and also have the right staffing and people in place in order to not only provide exam documentation, but also answer examiner questions eloquently and accurately, to make sure that the process moves forward smoothly.
All right, Denise, what do you think?
My key takeaway would be open communication, not just with your regulators, but across internal departments, and make sure that you're aligned.
Thank you. Dan?
Involve legal early and often, and don't be afraid to ask questions.
Got it on a business card, guys, so it's real serious. Nicole, last but not least, what's your takeaway?
From a fintech perspective, it's making sure that everyone on your end understands how important the bank exam is, and then also just ensuring that you have that partnership with your bank partner.
Wonderful. So I'd like to take a moment to just thank my panelists today for their wonderful perspectives. And on the screen here, you'll see the code to get your CLE. You got to get that credit. Thank you all for joining us, and we look forward to you joining with, I guess, us again in the future.